Today we're going to be talking about the 3 biggest misconceptions with FHA loans. FHA is near and dear to my heart. When I started the business in 2008, it is actually the loan that I did the most of. And the reason why I was doing so many FHA loans is because I had a lot of first-time home buyers who didn't have a lot down, and at that time in the market, conventional didn't have private mortgage insurance. There was no 3% or 5%, so we were working with a lot of FHA, which is 3.5%. So number one and most important, the minimum down payment on an FHA loan, regardless of the purchase price, is 3.5%. Okay? 3.5%. Now, in addition, regardless of the loan, regardless of the lender, FHA has an upfront mortgage insurance premium of 1.75%. Okay, I'm telling you this now. People never talk about it. You need to know that. It's very important. Now, do you have to pay that 1.75% upfront with cash? No, it gets financed into your loan. Now, often people will go, well, wait, if that's the upfront mortgage insurance, then I don't have to pay mortgage insurance every month, right? Wrong. You have to pay mortgage insurance every month with FHA as well. So it's important that you know that the 1.75 really is, I would almost compare it to a funding fee, because you are still paying mortgage insurance monthly, but they do call it the upfront mortgage insurance premium. Okay, and that could change. It's important to know FHA does change these things, but as I film this is accurate information. So for anyone watching this video 6 years from now saying, you're wrong, you're stupid, guys, look at the filming date. Okay, so a couple things that I hear a lot where I'm like, oh, that's totally wrong. So number one, I heard that you have to be a first-time home buyer for FHA. No, you don't. You could actually own 10 homes and still use FHA to buy a house. Seriously. There's no first-time home buyer requirement on FHA. Now, can you buy 10 houses utilizing FHA all at the same time? Absolutely not. FHA is an owner-occupied loan, okay? I cannot stress that enough. It is a owner-occupied loan. Now, could you buy a 4-unit with FHA or a 2-unit or a 3-unit? Yes, of course you can. You just have to live in 1 unit. So FHA is an owner-occupied loan. You don't have to be a first-time home buyer. Now, the next big misconception. Well, I thought that it had income limits, meaning that you can't make over XYZ to use FHA. That's incorrect as well. FHA has no income limits. Often that misconception stems from the fact that there's certain down payment assistance programs that are tied to FHA, and those down payment assistance programs have the overlay on income, okay? But FHA itself does not have any income restrictions. Okay, now, something else to keep in mind. Sometimes FHA can be a huge benefit in terms of having a lower monthly payment because the interest rate and the mortgage insurance may be lower depending on your specific situation. If you are a 640, 660 credit score, odds are your payment's going to be lower with FHA than with conventional. Okay? But in other cases, it's the opposite. So it's very important that whenever you're talking to a lender, you look at both options and you talk about the mortgage insurance. Yes, sometimes what will happen is really aggressive rate shoppers will end up in an FHA loan when it doesn't make sense because FHA will have the lowest rate, but it may not have the lowest mortgage insurance. Okay. Now, another thing is sometimes people will end up in a conventional loan, but they don't understand FHA is an option, and they could end up with a much lower payment with lower FHA mortgage insurance than conventional. Really depends on credit score. I cannot stress that enough. Okay, FHA doesn't penalize you for your credit score when it comes to mortgage insurance, but it also doesn't reward you. So with conventional, if you have perfect credit, your mortgage insurance is going to be very expensive. With FHA, whether you have not great credit or perfect credit, your mortgage insurance is the same amount. So I will have a link to the mortgage insurance chart for you guys because it's really based on loan amount and down payment. And it's pretty easy, but I do think it's always good that you guys have access to, these government sites whenever we have them because they do change and they do get updated. So that's that. Now, FHA is something else that's very important to know. It can be used in some really cool scenarios. So what I'll see a lot of, and I did an example a couple weeks ago in Los Angeles County. So, this is great for Alameda County, Los Angeles, San Diego. There's so many different counties. And as we get the new loan limits, we're going to see even higher loan limits, and we're going to see more and more of this. In certain parts of the country, you can do, let's say, LA was the example, you can do an $800,000 loan with FHA with 3.5% down, whereas conventional would require 5%. So in some cases, FHA can provide a lower down payment option than conventional. Okay, so if you're like, I'll never have enough, don't worry. The other thing about FHA that's important to note, it is a government loan, and government loans always have what's known as money in the margins, okay? And I've done other videos on what money in the margins is, but it's like this. Let's say you're trying to get into a house that's $700,000. You're doing 3.5% down with FHA or 5% conventional, and you're like, but I don't have closing costs. Like, the seller won't pay it. Like, I'm hosed. Not necessarily. With FHA, when I look at the rate sheet, if I go on a little bit higher on that rate sheet, I may have enough money to give you a lender credit to cover those closing costs. Conventional, there's not money in the margins. You'd have to go really high in order to get a credit of that size. Whereas like with an FHA or even a VA loan, you might not have to go that high to be able to give that credit. So if you guys are stretching to get into a house with savings and the seller's not going to help with closing, FHA can be a fantastic solution regardless of what your credit score is. A lot of people don't think about it. They're like, oh, I can only do conventional because my credit's 800, but I don't have enough money. No, let's look at FHA. Let's see what the money in the margin is, because it can be a really good solution for you. Okay. This is the last one I'm going to cover on this video, because I don't want to do a 20-minute video and torture you guys, but I think this is so important. And this is, if you get anything from this video, this is it. FHA does not set the interest rates for FHA. They don't. The rates are set based on the lender. And what I see from my chair is if your credit score is under 660, you could really be getting taken advantage of. So you always want to make sure you get a second opinion. Feel free to call me, licensed in 48 states. I am happy to price it and just say, yeah, like that's a great deal, or no, they're taking you for a ride. And the reason is, we see this in government loans, VA as well, especially, is there's a lot of predatory behavior. And whenever people have what would be considered lower credit scores, generally they're already a little bit uncomfortable. They already feel like they're going to be punished. So if a lender says, well, because of your credit, I got to charge you like 1% higher, they go, oh, yeah, that makes sense. Not with a government loan, not with FHA. Conventional, are they going to punish you a little bit? Oh yeah, I mean, that's the way conventional works. FHA, absolutely not. So you guys really want to make sure that you get those rates looked at. You make sure you like, please guys, especially 640, 660, 620, just call us and just be like, Jen, where you at? And I will price it out and tell you, because the stuff I see is just, it's crazy. And the reason it happens is because FHA doesn't set the credit score that lenders lend to either. So like one lender will say, oh, we need a 640 to do FHA, whereas another will say 660. A lot of the big banks, aren't chasing FHA business, so they'll have higher credit scores. So the players in the lower credit score area know they have less competition, so they know you're most likely to believe anything they say. So FHA doesn't set the interest rates. FHA doesn't set the minimum credit score. Our minimum credit score as of this moment is 600 for FHA. But yeah, you guys got to check those rates and feel free to call us. So I'm going to be talking about more and more about FHA this year, just because, 2022, because I think it's a great program and we're not using it enough right now. Bankruptcies in the history, short sales, foreclosures, FHA can get you quick. And if you don't have enough money saved yet, but you really want to get in the market and stuff's going up, FHA can get you in quicker. If your credit scores in that mid 600 range, FHA can get you in and save you a bunch every single month. So it really is a good loan that we don't talk about enough. So I'm going to be just talking about it like crazy. Questions, comments, what about FHA do you guys have questions on? I'm happy to answer them. Seriously, Julie and I did so many FHA loans. I think I've hit every scenario, but I'm always game to hear more. So please reach out, and thank you for watching.